Hello and welcome back. We are now on part 5 of how to make some easy money on Fidelity. We were talking about these upgrade downgrades and this amazing screen that Fidelity provides for us here. And the big question that comes up with all of these research firms is, okay, so they told us to buy something. When exactly is it going to go up? When they're making this prediction and they're saying, we think that this stock's going to go up to this particular price point. Well, when is it going to go up to that price point? Question, and the answer is we really don't know. Uh, we would love for it to be exactly in 2 days. We would love for it to be in a week, but you just have to look at the actual chart and take an evaluation off of what it has been doing over a period of time. And we can take a look, open up a stock here, just to take a look and see what I mean. We'll do a 6-month evaluation here. And again, you want to look at a track record here and see once they said this is going to go up to $20, how long did it take for that to actually happen? And it's not an exact science. And this is just a prediction. These companies will be wrong and they can be wrong, but it looks like it moved to $20 really not that far long after that they made the actual prediction. And so there really just isn't an exact time frame. When you got to keep that in mind, you got to be patient enough to leave money invested for it to grow. It's just like planting a seed in a garden. There are other terms here that are worthy to note, and you'll see things like underperform and underweight. These are not good. These are terms that are basically saying they have a bearish sentiment towards the particular stock. Basically, it's going to go down. And that's when we say it's a bearish market, things are going down. There's other terms that are overweight and outperform. And sometimes when a stock is referred to as being overweight, that can be a bad thing. And if you're talking about something different, yeah, it can be. But in this instance, if you see overweight, that's a good thing. And you could see overweight was the previous rating, and it has been upgraded from overweight to buy. So overweight or outperform is saying it's a buy, but kind of a soft buy. They're not saying definitely buy. You can see this stock right here, CFLT from Raymond James. They went from outperform to a strong buy. So it's just a higher intensity of outperform or overweight. And the same thing will go for if it's underperform or underweight. Neutral is, of course, neutral, and hold is they're basically saying, well, exactly what it sounds like, hold. I'm always looking for something that actually says buy or that is overweight, and that's an indication that it should be going up soon. So let's take it to the next step. We mentioned this CFLT here. Already this looks kind of juicy because we got a strong buy. You don't see that all the time. So we have CFLT. I don't like to click on it on this screen because if you do, it'll take you off of this home screen and it'll actually bring you to every single time this has come up recently, which is useful, but I like to kind of stay on the main screen so I don't lose where I was at off of the main thing. See, I just hit back now and it just sort of really messed up all of my searches. But we go back, and if we go back to CFLT here in Yahoo, I like to come back here first because again, it's just easy to see the chart comes up real quick and I just get some basic information. So first thing I'm looking for here is this thing, does it have legs? Has it been moving? Is this thing been a flat line for years and then all of a sudden just spiked? Because that makes me nervous. I don't like seeing that. I want to see something that has had activity for a long period of time. And we see a 5-year mark here where there have been multiple times where you have opportunities to get in and get out and get in and get out. You can play the yo-yo game if you want to call it that. I tell you, there's once you find a decent stock under these type of under this process, you compile a list and you don't have to go out and start over from scratch again. There are companies that have been growing over a period of time and they're just going to continue to grow. And really the ultimate question is, you could have just left your money in and just left it there for 3 years. Where would you be right now? But we're here to make money easily and quickly, and we're going for short-term gains. And this is what we can take a look at and see that this is possible with that because you actually have motion. So we've got that established. We'll scroll down a little bit. We've got basic news here, which I'm not going to focus on this yet. And from the previous video, I had 5 things that I threw up on the screen, and you might remember news media wasn't one of them. I don't even want to look at the news yet because the news can be biased. News is can be influenced. The stock can make things go up and down, and I don't even want to look at that yet. It will come, but that's like at a different stage. This is new. They've started to offer this feature community analyst here, which actually gives some information about what the company does. And they're a data streaming company. But if we scroll down, there's some more information here. You'll have a performance overview, which is a comparison to the S&P 500. So you're always going to get a comparison to the big dogs that we talked about before. And take this with a grain of salt. These numbers are just predictions. This is the just like our fund screens, they'll give you the estimated 10-year prediction. Now your earning trends, this is real important. Every 3 months, a company has to post their earnings statement. And knowing these dates and getting a prediction, again, based off of past history, if you know the date that these earning statements are coming out and it's going to be a good one that they've actually beat their estimate and you got these green dots, that makes a stock go up. And this next one, October 27th, is coming out. And the last 4 look good. So I like that. They will also have a little nice summary screen here of analyst recommendations, which is how we got here to begin with. And looks like there's at least 7 in the month of October here that are under a strong buy, 18 under just buy, and 9 say hold. So, and the latest rating was from Citigroup, which, you know, everybody's heard of them. Now, this is the part here, financial highlights, where this can be very deceiving. And when I had mentioned before, you have all these analysts that just spend their whole job is just going over this kind of data and these kinds of things. Typically, if you see these minus signs here, that is an issue. That's not to say that it's a bad company to invest in, because if a company is new, it's totally normal for them to show a loss for the first several years. That's okay. You wouldn't want to see this in a blue chip Fortune 500 company like Microsoft. You're not going to see something like that because they've been around for so long and they've been able to turn their investments, everything that they've invested into, their factories, their machinery, their staff, training people, they are now finally showing a profit because of the time they put into it to grow their business. But when seeing this should be a real indication of, okay, if I am going to get into this, how much am I going to invest? And you might want to be a little bit more cautious if a company is far, far into the negatives and has a crazy amount of debt. They also have a nice comparison screen here that says, well, this company has also competitors that are also in their sector. And here are some other companies you can check out that might also interest you. You look at these prices and go, okay, Path. This one's only $17. It's cheaper than this one. So if this went up $5 compared to this going up $5, I'd actually make more money with this one because it'd be a higher percentage gain. But this is a useful thing because you can now spider web and then go look up this company. And then from there, you might find another company, but you're staying within the same sector. So you're not just running around throwing a dart with a blindfold on. All of that is literally right on the home screen. So at this point, I'm kind of interested in this. So I haven't seen anything that's terrible. I like the actual price of it. It has a history of it going up and down, and there have been a lot of firms that have followed it. Everywhere you see one of these yellow dots is a time when a research firm went over all the books on this. Let's go ahead and go back and CFLT, and now we're going to go ahead and put it into Fidelity. This is where we get into that next stage of screening. Like if you were working in a factory and you got to inspect something coming down an assembly line, the first room, yep, it looks good. We're going to move onward and we got to get a little closer look and make sure there's no scratches on the paint, right? So we've got Fidelity here, and what I love about this is that they're going to give you even more detailed information. We mentioned before a very good breakdown of the company. Where it is, it's in Mountain View, California, and it was founded in 2014. So what we have is these tabs up top, and I like to click on sentiment. And sentiment here, there's even more technical analysis that have come out, and Fidelity has done all of this for you. It's coming from Trading Central, and they're saying the short-term sentiment for this for 2 to 6 weeks, if you were to hang on to it for that long, is good. That's pretty strong. 6 weeks to 9 months is also a fantastic outlook. And then the long-term sentiment. So this will kind of let you know, hey, maybe what's my goal of how long I should hang on to this. And again, these are predictions. Things change. In 4 months, what you see over here can be completely different. And then fundamental analysis. This is a nice visual way to look at it as well. This is where I mentioned before that those terms can be a little confusing, because here you see valuation, and overvalued and undervalued does not mean what it means on these screens, is what I was saying before. Basically, just look at this as a scorecard. You want things to be as far up here like a speedometer in your car. Okay. Valuation, if it's overvalued, it means too many people, there's too much hype about it. And people are they're just buying into it, and the thing's just gonna, it's gonna fall out from under itself. So you want it to be undervalued, kind of like a secret. You want all this to be up here: healthy financial health, high growth stability, and high quality. So higher the better over here. So we're going to get into this more, and next time we're actually going to show the profits that you can make on the stocks as well as the ETFs and mutual funds.